And joining me on the podcast and on video is Alan Green, CEO of Brand Communications. You're right, Alan?
Hello, Joss. I'm good. How are you?
Yeah, I'm all right. I may sound a bit echoey because I'm in a dining room, which is it's part dining room, part storage room. Because we just moved. We had sort of plumbers in, decorators in. So I'm just being pushed from room to room, wherever there's space available. I'm just sitting there for now. So yeah,
You're being
a bit
banished to
chaotic.
different corners of the house.
Yeah, I tell you what,
Yeah.
yesterday wasn't that hot? I mean, we normally do this on Monday. You went to London, but it must have been. I've seen the trains. Are the tubes air conditioned these days or not?
Well, thankfully, I didn't get on tube yesterday, but I know the Victoria Line tube. I often get on that, and that is like a sauna. You get into
Yeah.
there. We went out of Kingston yesterday and changed at Clapham Junction. The train out was the train up was air conditioned. The train out was very good, but there were delays on the way back to Waterloo. So we got on
Mm.
this train, which was travelling slowly, no aircon at all, and you're just sitting there. It's just pouring off you. It was just
Oh,
ridiculous.
and sharing a
And of
space
course,
with lots of sweaty strangers.
well, that's right. Yeah, everyone's sweating in unison. It was pretty
Some
horrible.
people pay good money for
Yes.
that.
Anyway, yeah,
Sharing an
that's
enclosed space with loads of sweaty strangers. I'm sure there are some Tory MPs who paid for
oh yeah,
that.
yeah.
Indeed. Yeah,
Anyway, that's a different show, Jess.
yeah. Okay. The market seemed to be recovering a little bit from the big sort of scary, worrying sell-off we got, of course, last week. I think it was last week now. Time is slipping by, but
Mm,
some weak manufacturing in America data and unemployment data. Then we had the yen carry trade selling off because they raised their interest rates first time for a long time,
mm.
and then people had to sort of sell their sort of assets based borrowed in yen. But it's calming down a little bit today. In fact, it's had a little bit today. It's
Well, I
not
think
been
we've
very well,
seen,
really.
yeah, the market rose initially, and then it dipped off again. But overall, I think it's a pretty solid recovery. And when I saw the data, I thought, yeah, well, there's going to be a sell off, but it's just one of those things that happens. The data's worse than initially had been expected, so there's a sell off, and then some markets, particularly up here in the northern hemisphere, with thin volumes, people panic and they jump out of positions they might otherwise have stayed in. So we
Hmm.
probably saw an over accentuated reaction to that, and now people are realizing that okay, life goes on, so the data's less than the data's worse than initially anticipated, but let's move on. And the market's responding well, so I don't expect a long term impact from that. But we've seen the correction, which arguably has created a, a good value entry point for some investors to come back into the market.
Yeah, yeah. If you look at that dip there, buying down, the dip right down, the big sell off, and then it's bounced
Mm.
back up,
Yeah,
and
it's come back,
yeah, back into the range sort of thing.
and
Still off the
and it
bull market. The bull market ate it with three on the AIM all share.
and
So
it
you still need to get above that.
and it's come back. It's come back sort of to that July low as well. So that's always a good sign, So it's kind of resumed its technical performance on previous highs and lows.
Sorry, I'm talking to the decorators ringing my front door. I said, go on the side. It's open.
Yeah, it's
Into
okay.
the
I have a
window.
decorate. We've got a decorator in here at the moment. He's currently doing upstairs and working his way
Yeah.
down. So I too will be out of the office next week. I'll
All
be
right. So
so
there's some individual companies out. What are we looking at?
okay. So we have spoken about all these before, but these great companies, and I do like the chart of this one as well. In fact, I like the chart of all of these companies. But Billington Holdings, BILN, was that a bark?
Yeah, so Lola
Okay.
sitting next to me. She just heard the painter come in. Lola, in your bed. Good girl.
Okay.
Yeah.
So Billington Holdings is the eponymous UK group. It's focused on structural steel and engineering solutions in the UK and Europe. Has a number of companies. It's a holding company for the group. Billington Structures, which is the UK's leading steelwork contractor with 75 years experience. Easy Edge, innovative safety barriers, temporary edge barriers. Hoardit, where you walk past these building sites, you see these environmentally sustainable and reusable hoarding solutions and what they call branded perimeters. Steel stairs, Marshall stairs, design fabrication of steel work staircases, balustrades. Then a steel centre up in Yorkshire called Shafton Steel Processing Centre. Specialist protective coatings, of course, when the steel supplied, all the coatings that go on to steel, and that includes rail, highways, defence, petrochemical, energy, and other aspects too. The company has had a blistering delivered a blistering performance this year. Results to the end of last year, revenues up 53% to 132 million, EBITDA up 94% to 15.5 million, pre-tax up 131% to 13.5 million. Also a big jump in cash and cash equivalents too, to 22 million, up 90%. Strong earnings per share, dividend also up 113% as well, and the company called it a record performance. They also have a record forward order book at the time. Despite market uncertainties, the company continues to perform in line. So since that time, we've had a couple of TR1s. One of the directors sold down through his company, Gutenga, a Jersey-based company, but Charles Stanley added to their holding from 4.93% up to 9.9%. So there's every UK construction industry, I think, is in a fairly good place at the moment. We've now got certainty with the new government in place. There will be money for construction going forward. So I think companies like Billington are going to really benefit from the certainty that the Labour government, now in for 5 years, has given the economy, and also, of course, investors going forward. So I see more growth coming from this company, and obviously we're in the run up to full year results, which will be here, I believe, end of next month.
Yeah. No, it was some construction PMI out last week, I think it was, and all areas, there's 3 areas of construction, civil, private, all this, but all areas are growing in construction. So it's very good news there. So obviously they'll benefit from that. They did have a very strong year. The only one concern is their forecast for this year, forecast to dip a little bit, but nevertheless, I mean, they're going to from 132 to 125.
They've got a
then
record
back
forward
up.
order book, so I'm quite
It's still
comfortable
good
with
value
that.
though. I mean, they said they got a chunk load of cash. So I mean, if you look at their enterprise value, just 40 million, because they've got cash last time at 22 million. So they can well afford that dividend. And yet, even going forward, if you look at the sort of values, we're looking at still a PE below 10 for next year. And that even goes down. EV/EBITDA of 3.86, so still good value. So yeah, top line growth isn't there for next year, but nevertheless, there's still good value, and that growth picks back up then 2025, because the forward order book kicks in. So yeah, no, I do like them. They do jump around the shares. Look at that. So it really rallied to almost £6. It's come back down to £5 now, but yeah, I want to see their quality results, because I do like this company. They're doing quite well. Return on
But
capital is good.
I think also, yeah, I mean, EBITDA numbers and pre-tax numbers are very strong, but the company's revenues jumped up from 70 million up to 132 million. I mean, that's a brilliant performance, but the company still has a market cap of just 65 million. So, you take that into account, that I think this company is very cheap as well. So I think we're going to see a lot more growth to come from this group.
Yeah, no, it's good. I like Billington. One to watch. Dividend payer as well. It's nice. Always nice to get a bit of
Yeah,
income on your
indeed.
investments.
Yeah.
What's next, Al?
Okay, this is a company called Frenkel Topping, code FEN. Shares are traded as high as 61.5p, as low as 42p, currently trading at 48.5p today. So this is a company that provides advice and asset protection to clients at times of vulnerability, financial vulnerability. They're experts in the field of personal injury and clinical negligence. Their client retention rate is very strong, 99%. And there's a lot of consolidation in what is a very fragmented space for personal injury and clinical negligence. This company has struck partnerships with a company called Cardinal Management and others. And these companies work with major trauma centres. They've just signed most recently a partnership with the new trauma centre at Sheffield Children's Hospital. They now work with 11 centres through Cardinal Management, and Cardinal Management have helped over 8,000 patients. So the company earns obviously from the or a percentage of the fees from the case. They delivered a very strong performance up to April, up to December last year, as announced in April. Turnover up 32% to 32 million. Net revenue, gross profit up 25% to 13.9 million. EBITDA likewise up 31%. Pre-tax up 31% to 7.2 million. And net cash up as well, 35.7% to 3.2 million. So the company is building this business. The outlook is very good for the current year, and the company has a 7.5 million revolving credit facility with Santander to fund some of these cases. So it's a good business. The people that run the business know the industry inside out. They also work with a discretionary fund manager, Accenture, that manages the portfolios for clients in these circumstances. And they also have Sharia law compliant and ESG compliant portfolios too. So very well set up to manage this business. So that it's a niche area, but this company has a lot of experience in there. And again, we've seen a performance throughout the year where the shares have slowly slipped, dipped down to that year low of 41.75p, and since that time they've recovered nicely. So I think they've crossed the line in terms of the technicals now, which should see the shares push on from themselves, provided they hold. I think it's looking at 40. Is that 48?
48.8 there
Yeah.
at the moment, but
Yeah.
it'd be nice to get above this. Well, in fact, they're above that, so a bit of support there. If they can stick above that, 46 would be quite nice. If so a bit of a downtrend. They've come from 70 odd pence start of 2023, 76 down to almost like 42 pence, but they're quite illiquid. That's the trouble. It's a little bit patchy.
But they're in a niche market, and I think it's easy to overlook a company like this because on the face of it, it looks to be a fairly sort of mundane transactional based business, but actually this area, the instances of clinical negligence and personal injury are on the increase, and this is a huge growth market. So I think Frenkel Topping certainly seem to be the player of choice in the market, and they seem well placed to grow the business. But I think a lot of investors might want to look at this and wait until we get a further trading update, which of course is now due ahead of the full results. So I'm sure we're going to hear something from the company either at the end of this month or early to mid September.
It's a curious name, isn't it? I did look it up and see what it was, but I think it's one of the older part of the businesses. But Frenkel Topping, it's like
I thought it was something to do with cakes when I first heard about the company.
Yeah, or even stuff on ice cream, or maybe it's something maybe an old style barber would say to you after a haircut. Frenkel Topping, sir. Oh yes, please. I'll have a bit of Frenkel Topping. Yes, please.
Or you walk into the pub and say, would you like a lager, sir? Yeah. I'll have a Frenkel top, thank you. With that,
yeah. It is like an old ale. Yeah, maybe it's an old ale.
Frenkel
beer,
top,
you know?
yeah.
Oh, just 2 pints of Frenkel Topping, please.
Yeah, a Frenkel lager with a lemonade top.
Yeah. Cool. What's next, Al?
Okay, so finally, this is an old favourite and one we've spoke about over the years, in fact, and this company's done astonishingly well, continues to deliver. It's a real British success story, but in a niche area. This is cosmetics, of course. So the company is Warpaint. W7L is the EPIC code, and the company sells under its own lead brand names, W7 and Technic, and it's sold to UK and distributors worldwide. And if ever you wanted to find a top right hand corner chart, this is the one. It's just delivered outperformance after outperformance. And if you picked up the shares a few years ago, you'd be absolutely laughing, laughing by now. But so the structure and the way the business growth has really was transformed with the retro acquisition in 2017, which really helped them turn a corner and change the nature of the business, gave them the tools to accelerate growth. And I'm looking back on my notes here over the years, and it's just basically growth in sales, growth in margin, growth in EBITDA, all the way through. In April this year, we heard about the full year results to last December. Sales up 40% to nearly 90 million. Revenue up 60%. EU revenue up 60%. UK revenue up to 17.5%. Gross profit margin up nearly 40%. EBITDA up 74%. So this is just top right hand corner stuff all the way. Of course, with this sort of performance, the funds are taking interest. JP Morgan are now holding 8.7% up as opposed to 5% previously. Then in May, of course, they announced an accelerated book build at £4.50 to institutional investors. The chief executive, Sam Banzini, now holds 20.6%. So a CEO that's well invested in the game. Ewan McLeod also owns 20%, subject to a lockup going forward. And of course, they've commenced trading on the OTC in the US as well. So dual listed now, so US investors can grab a piece of the action. They announced a trading update with the AGM statement back in June. Strong trading for 6 months to June 30th. Sales for the first 6 months of 46 million compared to 36.7 million previously. And this is particularly impressive because Warpaint's performance historically has always been second half weighted. And the management said this: strong trading for the 6 months to June 30th, margins ahead of last year, sales still expected to be second half weighted. So we're going to see an even stronger performance in the second half. And the company is seeing significant opportunities to expand with partnerships both in the UK and elsewhere. They're also going to be making further product rollouts and expect to pay a final dividend of 6p. So again, superlative stuff from Warpaint. And this is a lesson on how to build a company, how to expand a company, and how to run a company successfully for your shareholders.
Yeah. So what's the rating of these now? I mean, what is because they say, I'm looking for a trading update notes for results. What's that?
There's no well again, I mean, we had interims in April, so we're going to be due full year results, I say probably late September, early October. But that the trading update came with the AGM statement, which is quite normal, so I doubt we'll hear any more until that time. But but certainly if you look at the share price performance, we're seeing a bit of consolidation now, perhaps around the £6 mark, but I wouldn't expect it to fall too much from there. But given that sales are second half weighted, if the numbers are better than expected and also trading for the current year, there'll be some strong indications with the full year trading, with the full year results of current trading. And I think the market will be looking for that to decide whether to bid the shares higher at that point. But every expectation is going to continue to push up to £7 by Christmas.
So what's the market cap? 18. I mean, the thing is, when you get a winning company,
market cap is 461 million currently.
Yeah, but it's got, it's like I said, it's a great business. Sometimes you have to pay up for these great business. How much do you pay up for it, though? That's the thing.
Well, you do. The trend is your friend. The momentum is there. The growth is there. The infrastructure is there to exponentially grow this business too. And I think that's the exciting thing about it. So we're seeing this growth in sales, but cosmetics, you've got the manufacturing facilities in place. You've got all of those factors there. So given the relative size, I suppose, of each unit, each item is pretty small. You don't need a huge amount of extra space to manufacture more of it. It's not like lorry parts or steel construction like Billington. You're if you've got a production line and you're churning out 200 or 2,000 units a day, and you want to crank it up to 4,000 units, it's not a huge task to do that. So that's the I think the growth opportunities that lies with this company.
Yeah. Look at that last year. Look, even profit after tax.
Yeah,
That was doubled, more
yeah,
than doubled.
yeah,
People, but yeah. So, so 14, yeah. No, I didn't. I said time to buy these was when they were growing down here, pretty much, and a crack-in run. But now, we'll see where it goes because it's flat. Like we've a
yeah.
high
I
in
think a lot of investors are
640
going to wait.
July.
Yeah, I
Yeah,
think I think a lot of investors are going to wait until we have the news from the company. Because with that news announcement, or with the full year results announcement, will come an update on current trading, and that's going to be crucial, I think, for investors because it is highly rated, but it's highly rated because it's delivering growth and it continues to deliver growth. As I say, just think about. I think if you've got an understanding of business, manufacturing, production lines, all the rest of it. How much with the manufacturing process you have, how much does it cost to increase your daily output from 2,000 or 5,000 units to 10,000 units or to 4,000 units? You just need to make the machine work a bit harder, or maybe increase the hour. I don't know, but it's not going to take.
yeah. Oh, I understand that, but it's just at the moment, if you look at this has done since 2023. This has done 236% growth. That means
Mm,
it's basically three times the market cap now. So if you go back to then, you pretty much around 100 million market cap, and
yeah, yeah,
from there it could double quite easily. Well, not easy, but well, it was easy compared to how much they're pumping out in profits and growth. Now that 460 to double again, you're close to a billion. You know,
sure,
almost
sure.
market cap. So it's unlikely, or 900 million. So it's unlikely to double like that again. I mean, the big fast,
Yeah.
increases happen. You may have a steady rise now, but nothing like this happened. The big opportunities happened. In fact, I mean,
Well, the
for me
big opportunities
personally,
happen, but they've now got the US listings. So if there's that, there will be further opportunities to expand the business and grow it.
yeah,
And I think probably from here on in, it's going to be a stock that will focus on paying a big dividend rather than delivering huge exponential growth. But even so, there's it's highly valued on the one hand, but there's still scope for a massive jump in valuation in my book. I think we could, it's not inconceivable in the next year to 18 months we could see it double or double and a half in value again. Maybe up to 1.2,
billion
1.3 billion.
market cap. You're thinking?
Well, look what happened to
No, I understand that, but we're
yeah,
talking about
yeah,
size, aren't we? We're talking about
yeah,
if you're looking at, it's a lot easier to go from 100 million to 200 million,
mm,
especially if the growth and profit support that. And now it's getting to the stage where it isn't quite supported. It's like 30 times PE now, or
mm.
pretty much more than that. And now you've got a 460 million market cap. Now to get them 460, to 900, 900 million, that's a lot harder, to support that valuation. It's a lot easier to do it when you look
Well,
at
it
small.
is.
That's why I focus on microcaps, because if you pick up
Yeah,
on something like this when there's a microcap, that's when the re-rating can really happen. When you capture these exceptional businesses, like I say, generally, most businesses by definition are average, right? And then you've got some that are better than average. And then you've got great businesses, a lot fewer of those. Then you've got exceptional businesses, which this is. And there's fewer of those around. It's probably,
yeah,
if you look at the AIM all shares, probably 1 in 100 businesses, if that, are pretty exceptional. And
mm,
maybe
mm.
maybe you get 5 in 100 that are good businesses, or great businesses. But yeah, no, it's an exceptional business, full stop. I'm just thinking now, every time I do say, "Ooh, the valuation is getting a bit lofty," it still goes up. So I wouldn't jump in now because I missed out. I'm not in there. But
Yeah.
it's an exceptional business.
Yeah, I think if you bought, say, back in September 2023,
Mm.
down with the shares for sort of 70p or whatever, then you would have taken some money off the table by now because you'd be sitting on a
Yeah.
multi-bagger, and you would
Well,
have taken some money off the
look at
table.
that. You can see what happened just before COVID, right? It really rallied. Then
Mm,
COVID sort of kicked in. It
mm,
rallied at 240 a share, came down, and it did trade in the price range pretty
mm,
much from May 22 to November 22. Then you can see that level there where it broke back up. That was previous sort of support here. You can see it broke above that, and at 150 a share, it broke a previous range, and it got up there, and then it never looked back. Pretty much, look at that. I mean, bit of a range here, but it
Blazer trail,
didn't
blazer
come
trail.
back down to 150. Went down to 155, 158, but didn't come back down to 150. And you can see another trade range here. And you happen with these things before they go stratospheric, you see a couple of trade ranges, and they goes up again, and they kept going up. But now I'm thinking, but sooner or later, it's got to roll over. Because it's like anything, it's like, Nvidia, fantastic sort of business, churning out growth.
Yeah.
But in the end, the valuation gets a bit toppy and it catches up with itself, and and you can't afford to miss then. And as yet, they're not going to miss. I mean, it sounds like, but I mean, if they do, anytime they put out something that's less than spectacular, it'll sell off. That's the trouble.
I will concede there's little room for disappointment, but that is the way with the highly rated stock. If there are any red flags at all, then the sell-off will be disproportionate. But that's quite normal. But
what I want to say is, if you down here, they were great value and they had growth. They had growth and value. That's what I look for. Growth and value is what you look for. And maybe I should have paid more attention to you, Al, when you were talking about them previously down here, because you were talking about them when you were covering them down here, weren't you, before?
Yeah,
so I should actually listen to you.
It's a niche business, and the company's done incredibly well, and but I think it is these, and I think what we've done, companies like Billington, like Frenkel, and others we've spoken about here on the podcast. There are so many really, really good companies out there that are in these niche areas, and they, Try and Fast, we've spoken about the fastings company. They're just operators in this niche area. They generate plenty of cash, pay a dividend. They're never going to set the world on fire. They're not going to be sort of multi-billion pound multinational conglomerates, but they are very good businesses in their own right. So
well, I say that. I said, listen, I've talking about a couple of companies like Beeks, for example, and Ramson's, and Billington, for example. But I said, you have to understand, the average business is average. You get good businesses, you get great businesses, and you get exceptional businesses. Now, what you want to try and do is, if you get a good business, a good valuation, that's fine. But you want to try and get a great business. I do believe, I believe Ramson's is a great business. It's just a rollout of a strategy that's doing very well. Their margins are good, and now with gold, I also think Beeks is potentially an exceptional business, and the Warpaint is an exceptional business. There's not many of them around. Of course there aren't. By definition, there's not. The average company is average, But and that's the trouble. We of course we talk about stocks on a regular basis. We have to cover so many stocks. There's no one doing it. But I mean, because if we just covered exceptional companies, there'd be hardly any content because there's no news out every week. But I mean, like this is an exceptional company, but it's catching them at the right time. And I think Beeks is an exceptional company, but has yet to. It's rallied. But I mean, if you look what's happening with Beeks, they got the chance to change the industry, and that's phenomenal. And I think Ramsden's is a great business because they are rolling out a very efficient model. It's a cookie cutter operation. Literally, there's no high risk to it. They're hugely cash generative. They just announced now record profits again for this year. And also to catch on to this in a bit, you think that is a great business, Okay, it's maybe not exceptional business, almost changed the industry they're in. And that's like the same with like I said, Warpaint pretty much has done that, and Beeks has the potential to do that. They can change that's exceptional business, but there are great businesses they're doing very good money at, and but there we are. But no, I mean Warpaint is exceptional, but I think now sooner or later it will have to have a pullback. Maybe it was worth jumping in then, but having said that, you see momentum. People keep chasing good stocks, exceptional businesses tend not to just have big fall-offs because people tend to be their buyers. Any dip, they buy the dip,
Exactly. Well, I think the trigger for the opportunity is going to come with those results because we'll have the update on current trading, and I think that's what we know. There is the results for last year were or the interim results will be very good because they've already indicated as such in the intrends. But I think it's going to be current trading, and if there's evidence that that weighted second half performance is kicking in, then we're going to see the shares push higher or not. If there are some red flags there, or if it hasn't performed, or if it's dipped off over the summer, then we'll see a pullback, and therein lies the opportunity.
I'm just annoyed I didn't. This is the kind of business I look for. I just annoyed I didn't get into it like the early 2022, 23 when when I should have got into it. So I'm bloody annoyed really more than anything. This is an exceptional business.
Can't win them
exceptional
all.
business, which is
Yeah.
I missed out on. But
Yeah.
listen, we know they don't come around every day or every week, but they are out there, and you just got to
They
keep
are
an
out there,
eye
and
for them,
it's our job to seek them out, Justin.
yeah. Well, Beeks is one, and Rams is a great business, but Beeks is probably could be quite exceptional. But it's got something the industry hasn't got, and they're shouting out for, which is Exchange Cloud. Anyway, that's it. Thanks. We covered three there, didn't we, Al?
We covered three. We did.
Oh,
Yes,
yeah.
we covered Frenkel Topping. We covered Billington
Yeah.
Holdings too. Yeah.
Yeah, Frenkel Topping, sir. Yes, please, sir. Okay.
Pint
Cheers,
of
Al.
pint of Frenkel with a lemonade.
Yeah.
Thanks, Justin.
Pint of Frenkel Topping. Yes, please, sir. Lovely. Cheers, Al. Speak next week.
Cheers, Justin. Thanks, mate.